Welcome to Lunch and Learn with Members First Community Credit Union. Series 1, Auto Buying Made Easy. Whether you're looking for a new auto or just an auto that is new to you, follow these 8 simple steps and avoid these common buying scams to make your next purchase ride like a dream. Step 1, determine how much you can afford. You can visit our website, membersfirstccu.com, and click on MFCCU calculators to give you an idea of payments. How much is your trade-in? How much down payment will you need? How long will you take the loan out for? Typical terms range from 36 to 84 months. The longer the term, the lower the payment. And what is going to be your finance rate? You can find current rates on our website. These are all questions you want to ask when you determine how much you can afford. Step 2. Obtain that pre-approved financing. Knowing your credit score is the first step in doing so. We can run your credit report for you at no cost and help you review it. You can also utilize annualcreditreport.com and view all 3 credit reports from the 3 bureaus at no cost. We can also get you pre-approved. Then you will know what you can borrow for your auto, how much it will cost, and your finance rate, giving you that extra bit of confidence when you step on that auto lot. Step 3. Select a vehicle that will meet your needs. Whether you're a large family that needs maybe a minivan or small SUV, or a commuter for work who needs a more fuel-efficient vehicle, research will be key. For new vehicles, try Consumer Reports magazine and their website, and for new to you, newspaper ads, weekly shoppers, and websites such as AutoTrader are all good tools. NADA is going to be your friend. It will not only give you an idea of your trade-in, but what a used vehicle you are considering is worth. Carfax. It's available through the credit union at a discount and will give you a background on the new to you vehicle. Test drive and inspect that new to you vehicle. Step 4. Obtain the best or fair price to pay for your new or new to you auto. To do so, you want to first familiarize yourself with dealer terms when purchasing new. Base price. The cost of the car without options. MSRP is your manufacturer sticker retail price, which is your base price with manufacturer's installed options with their suggested retail price. Transportation charge and mileage. Dealer sticker price is your sticker price plus suggested retail price at the dealer installed options, and your invoice price, approximately what the dealer paid for the vehicle. Obtain pricing quotes from several local dealers, which include additional fees, incentive rebates, and final out-the-door price. And online sources such as Cars.com, Edmunds.com, and Carwoo.com can help you out. Avoid optional extras such as credit, life, and disability, dealer-installed alarms, physical treatments such as undercoating, paint sealant, and fabric protection, and splash cards, detailing, and trim. They're typically overpriced and can be purchased elsewhere. Determine your price, and if you want to offer each dealer the opportunity to beat that price, go for it. Obtain a signed purchase order from the winning dealer that will detail all your negotiated terms. When purchasing new to you, use any resource available to you to find a good value, such as NADA, Kelley Blue Book, or Edmunds. And then once inspected, you can determine the cost of any repairs that were found to be needed and include those in your price negotiations. Step 5. Now you're going to sell or trade in your current auto. Trading it in is easier, but it could cost you hundreds or thousands of dollars, so both options need to be weighed to get the best deal for you. If selling on your own, follow these basic tips. Fix all minor repairs and clean thoroughly. Obtain a Carfax report to verify the car's history and mileage. List it in the local papers and AutoTrader, and use Kelley Blue Book or NADA to get a value. Trading it in. Keep your purchase and trade-in negotiations separate. Use Kelley Blue Book or NADA to know the trade-in value prior to stepping onto the lot. And visit 3 or 4 new auto dealers to get outright purchase offers on the car. But remember, if it's older and higher mileage, stick to used auto dealers. And remember, dealers do not need to run your credit report. They do not need to know your current payoff on your vehicle, and they can always say your car model trade-in is not selling right now. Step 6. Purchasing or at least checking on extended warranties and guarantees. For a new purchase, experts still cannot agree if extended warranties are necessary for that new vehicle. We suggest not taking it out until your vehicle is nearing the end of the factory warranty. Should you decide to purchase one, know the company and don't be afraid to compare prices and coverage options from several companies before deciding which way to go. The credit union offers affordable options through Route 66. CarChecks and Warranty Direct also offer free online quotes. If it's new to you, some autos are certified, which means they carry a manufacturer warranty. When purchasing from a dealer, get at least a 30-day one. As is typical in most private sales and even some deals through a dealership. So just like when purchasing a new auto, be sure to shop around for the best price and coverage on that new-to-you vehicle. Step 7. Obtaining auto insurance. Get a quote. You may be able to afford the vehicle, buy it, then you quote the insurance and you may find sticker shock at the price. Shop around for not only the best rate, but the most reliable and strong companies. J.D. Power & Associates gives ratings for financial strength for insurers. Also take advantage of your credit union benefits. As a member, you can receive discounts through TrueStage on a variety of insurance products. Gap. Should you have an accident and the insurance company considers your vehicle to be a complete loss, it will cover the difference your insurance company pays and what you still owe on the vehicle if it doesn't pay your loan off. If you owe more than it is worth or put less than 20% down, it's recommended to add it, but not through the dealer. They can charge way too much. Step 8. Finalizing that purchase. If it's a new vehicle, you obtain the check from your financing institution, bring your down payment if you have one, review your contract for accuracy, inspect the auto for defects, and make sure all requested changes have been made. Sign the contract and enjoy your new ride. For new to you, obtain the title and make sure it is signed and correct and register with the state if it's a private sale. And if not covered by a warranty, consider at least a 90-day one. Obtain your final paperwork, sign the contract, and enjoy your new to you ride. Auto buying scams do exist. Following the 8 steps that can help you to avoid those common buying scams, but it is important to be aware of what may be lurking throughout your auto buying experience. When buying new to you, get a vehicle history report. Carfax, AutoCheck, and NADA are useful tools for obtaining history on a used vehicle. Get a mechanic's inspection. Find a reputable mechanic to inspect your vehicle either by going online or getting referrals from trusted sources. Make sure they display their AES or Automotive Service Excellence seal so you know they are certified. Seller's identification. In a private sale, ask to see the driver's license of the seller and the title to match the names. Extended warranty. When buying from a dealer, get at least a 30-day warranty, but when buying as is, shop around for good warranties that are affordable. Dealer add-ons. Beware. Don't feel pressured to purchase unnecessary or overpriced items such as fabric and paint protection. You also want to research credit, life, and disability options as there are more affordable options outside of the dealership. And markup fees. Negotiation should always start with the invoice price, not the markup price. The vehicle typically have 2 tags, the MSRP and dealer price tag, which is usually higher, including overpriced installed dealer equipment and unnecessary fees. When buying online, deal locally, then you can meet face-to-face. Avoid sending personal information. Unless you're dealing with the final paperwork, there's no need to send your personal info. Check with the Better Business Bureau. You can also check with the Secretary of State to be sure the agency is registered and in good standing. Don't pay until you receive your ride. Make sure you have the vehicle before paying, and if selling, before you spend the funds given to you for a sale, make sure the check is good. Get a mechanic's inspection. Don't buy without getting it inspected. There may be problems you can't see just by looking at it. And avoid certain sellers. If they won't meet face-to-face, they want to move the transaction from the original site to another, say they want to sell due to deployment, death, or a similar story, or ask for funds ahead of time. Beware. In reviewing the 8 steps to making auto buying easy and the common scams to avoid, we now want to review your loan versus lease. Owner potential. With a loan, the car belongs to you and the lender until paid off, and then it becomes yours. With a lease, the car does not belong to you, and at the end of the lease you return the vehicle unless you choose to purchase it. However, the cost ends up being more than had you just originally purchased the vehicle. Wear and tear. On a loan, there are no limits or charges for excessive wear, but it can lower the value. On a lease, most charge you extra money for any damage found at the end of the lease that goes beyond normal wear and tear. Monthly payments. On a loan, higher, but they are set for a term, and once paid in full, it's yours. With a lease, lower because they're not purchasing the vehicle, the dealership still owns it. As long as you lease it, you continue to make payments. Mileage limits. Loan. You can drive as many miles as you want. It will just lower the value the higher the mileage. Lease. Restriction on the number of miles allowed each year. You can negotiate higher mileage, but it will mean a larger monthly payment. If you exceed the mileage allowed, the dealer will charge you for each mile over according to your lease. For example, you get 24,000 miles for the year and are charged 15 cents for every mile over. If you drove 3,000 miles over, you would owe $450 for those miles. Auto insurance. For a loan, it's typically less for a purchase. It may be higher during the loan as the lender may require more coverage. For a lease, it costs more than if you buy, as a lease will require more coverage, and some carriers may consider leasing more risky than purchasing. And cost. Loan. Purchasing is typically most cost effective if you plan to keep it long term. In the short term, the total loan amount may be higher. Upfront costs can include down payment, taxes, registration, and other fees. For a lease, it costs less in the short term because the total loan amount and payments are typically lower. However, if you exceed the mileage and or decide to buy the lease outright once the lease has expired, it will end up costing more. You are also responsible for any early termination charges if you end the lease early. Upfront costs can include first month's payment, a refundable security deposit, taxes, registration, and other fees. We thank you for viewing our Lunch and Learn with Members First Community Credit Union.